US stocks fell on Friday after a floppy debut by Facebook spoiled the market's sentiment. In fact, Facebook was pretty volatile on its debut, and after early gains of more than 10%, it fell back to the $38 issue price, ending at $38.23. Meanwhile, the S&P that dipped below 1,300, which is seen as a key support level for the first time since mid-January. Investors have been a little cautious as leaders of the Group of 8 Nations, or rather the G8 summit, met over the Eurozone debt crisis. The Dow dropped a good 73 points, the S&P 500 index lost 10, and the Nasdaq Composite fell 39 points on closing bell.
Start with Asia, and Asian markets are trading mixed. Let's look at Japan, up 33 points. Hong Kong has taken a knock of 75 points. China is flat at 23.44. But if you look at SGX 48.83, down about 15 points. On Friday, because of State Bank of India numbers, Indian markets did manage to bounce back, and India was the best performing market in the entire region. But today we could see some correction. So where do we stand for this week? So at a time when most of the local triggers are missing, earnings season is officially over. I guess Indian markets are completely hostage to global cues. And if you check on global headlines, things are messy. Nothing much has come out from G8. After Greece, there is a run on Spanish bonds. Facebook IPO has disappointed Wall Street watchers, and China has indicated that they are now feeling growth jitters. So global pain, one would argue, is here to stay, and it's very difficult to make a strong bull case, at least on paper. Ketul Sakpara, Director with EQC Funds, joins us live from New York now. Ketul, morning. Thank you for joining us. Ketul, what are you advising your clients? Are you advising your clients that they should use the current market environment to their advantage and buy fear?
Hi, good morning. Yes, I mean, from a valuation perspective, this certainly looks like a very good point to get in, especially that the sectors that we deal in, energy infrastructure, these are high dividend paying, stable businesses, which have nothing to do with the Eurozone. Not even 1% of their revenues or earnings come from the Eurozone, or in fact outside the United States. So these businesses are very stable. You have dividend yields into the 6, 7, 8%, some of them very stable companies. So we are definitely in the mode where we think this is a very good buying opportunity. Obviously, you assuming that you are willing to take some short-term volatility and you have the stomach to go through that, I think this would be a good time to get into the markets. For the next 1 month, at least up to the point we get some resolution on the Greece election and the new government, I think you are likely to see a lot of volatility in the market. But if you have the patience to go through it, I think this could be a very good buying opportunity.
Ketul, what about the G8 summit, and can we expect anything constructive which could provide direction to future equity course as well from this particular summit this time?
So I think there are two things to look out over here. The first thing is what the Eurozone members want. The Eurozone members certainly want Greece to stay. Unless Greece comes up with extremely unreasonable demands, I think the Eurozone members are likely to give a lot of leeway to Greece. So I think the probability of a Greek exit is low at this point. Even though we have been discussing that off lately, I think it's a low probability event. On the other hand, the elections in Greece, these are not things that work on rational thinking or rational decision making. Elections are typically won based on fear and emotions. So the outcome of that election is highly uncertain. So you cannot say, a lot of things about those elections, and that's one of the reasons why there is a scare in the market. But overall, I do believe that if you think rationally, it does make sense for the Greece people to stay in the Eurozone, because if they go ahead and introduce their own currency, I mean, you can imagine then half of Greece might not be able to afford food, electricity, fuel, anything, because nobody would be willing to provide anything to Greece in exchange of drachma. So you can imagine for the next couple of years that would be a total chaos. So given all of that, the rational thing for the Greece people and the Eurozone would be to somehow solve this crisis by providing more bailout, either by printing or by asking the debt holders to take some sort of a haircut. So I think, rationally speaking, Greece situation should be resolved, but what happens in the elections, I think that is anybody's guess.